Frank Braddock, you're a fan of frontier markets and you like them far more than traditional emerging markets. Tell me why.
Well, the biggest reason is you really get some diversification benefit with frontier markets. Emerging markets were really good, worked very well for a long time, but the correlations now with the developed world are, in the 0.8, 0.9 range. You're not getting a lot of additional diversification benefits to the portfolio. The other thing that I like about it is when you look at it, you end up developing a market that's going to have a lot of staying power over a long period of time, just purely based on demographics. You've got a very young population that's growing. The economies are growing very rapidly, much more rapid than what we're seeing in either the emerging markets, traditional emerging markets, or in the developed world.
And which emerging markets do you like? Excuse me, frontier markets.
Well, and actually what I end up liking is a diversified basket of frontier markets. When you start looking at some of the geopolitical risks that you assume with any one specific country, you can end up putting yourself behind the eight ball, so to speak. So I like looking at a basket of different emerging market economies. There are really about 40 of them that you can work with. And even there, the correlations are widely diversified. So for example, Ukraine doesn't correlate very well with Vietnam, for example.
And do you do it through ETFs or mutual funds? How do you get to these frontier markets? Do you go to the companies and you buy them on the local exchanges?
No, and actually most of the time what we end up doing is we look for active management. There are a couple of ways of approaching it. You can approach it from the perspective of using an exchange-traded fund or an index, or you can approach it from using an active manager. I like having somebody who's actually on the ground in those countries, who really understands what appear to us to be very subtle nuances, but in reality have a huge outlying impact on returns.
All right, the big question is, what about the risks involved with investing in frontier markets? You look at Russia right now, that economy, that stock market has collapsed. And for a while, everyone had to be in Russia because it was one of the BRICS. That was an emerging market.
Right.
So I imagine the geopolitical risks are even higher for a frontier market.
Not only the geopolitical risk, but you've also got liquidity risk, you've got cost risk, because it's a lot more expensive to buy in those very small, very quickly growing economies. Again, that's the reason we end up looking for baskets of economies rather than just one specific country.
All right, thanks a lot, Frank.
Thank you.
Thank you for watching The Street.